Welcome to our weekly market review. It's brought to you by ETM Analytics and TreasuryONE. As per usual, I'm joined by André, Cilliers, currency strategist at TreasuryONE. So we finally had our very much anticipated Xi-Trump meeting in Beijing last week. There was a lot of pageantry, a lot of talk about cooperation, a lot of fake smiles and smiles, and yet very little on real substance. We, of course, know that the Iran conflict currently underway in the Middle East was one of the discussion points, perhaps not the main one, and definitely not, if you read some of China's statements, one of the big ones. But both China and the US said, look, it's better for everyone if the strait is reopened. But in the absence of any formal structure that's been announced and how they're going to ensure that, it remains political pleasantries. Meanwhile, you have Iran just tightening their grip on whatever flows through the Strait of Hormuz. I see their Persian Gulf Strait Authority is actually now available to follow on X. That's how official and serious they are about this. So that is continuing. There is no change. And for the rest of us, we're just kind of pinching our eyes whenever we fill up at the fuel pump.
Yes. You know, I can add a lot about boats and ships and wars in Iran and so forth. But I think, you know, let's step a little bit away from that, because there's nothing that we can really say that will change anything there. We are hostages of Donald Trump and Iran on this whole situation, and we remain hostages as the world on this one. But in the meantime, we did at least have the Federal Reserve minutes that was released. We are closer to the end of the month, and Mr. Powell will go into retirement without investigations hanging over his head and so forth. And the new governor that will come in, or the president of the Fed, that they say is a little pet of Mr. Trump. We'll see how that one goes. He comes in. But we know that from those minutes, that they are likely to stay at more elevated levels and higher levels of interest rates rather than going to lower levels. We know that they are concerned about inflation and the impact of what happens in the Middle East on inflation going forward. So I think taking that from them and then moving on to a monetary policy committee meeting that's going to take place in a bit more than a week from here in South Africa, we can very easily say that the likelihood of us changing on interest rates is also very slim. The fact that Mr. Kanyahu is going to come out all guns blazing about the negativity of what lies ahead in terms of inflation, and clearly spelling out what he will be doing if that happens, and that's, of course, higher interest rates, is once again also a foregone conclusion. And I think that is more or less the same situation throughout the world, throughout all monetary policy committees from all central banks, the case. So the impact is still seen of the Middle East and the fact that we don't know what will be happening there and how long this impact of higher oil prices and uncertainty will have an impact on economies, interest rates, inflation rates, and etc. Obviously, then world growth.
So we know inflation is also coming out later this week. Market expectations is around 3.9%, which is way off the base of 3% that the Reserve Bank would like it to be. What are the odds of Netanyahu stepping out early? We know that they like to be conservative and careful in how they operate things. Do you think it's more of a wait and see approach still, or do you think they might decide, the committee might decide, might I add, to rather move preemptively?
I would only put a 40% chance on actually preempting it and moving to a higher level. I think they will be cautious in not acting too fast, because if something changes in the Strait of Hormuz and the whole Middle East situation, then we could possibly see a slight lowering of fuel prices in June. And if that happens, we would then see basically a stalling of the rising of inflation. And if that levels out, then the next move would be turning downwards again, and that would be satisfying the needs of Mr. Kanyako. So personally, I don't think that they will move at this Monetary Policy Committee meeting and preempting it.
One of the things that's complicating matters for central banks at the moment is Friday's start of that surge in bond yields that we saw. US Treasuries northward of 4.5% on its 10-year at the moment, and it seems to be happening across the board. Not sure if it's risk of sentiment at the moment playing out, but what we're seeing in equity markets happening on Friday was the exact opposite. Is kind of this rally happening driven by the AI stocks. And obviously that is also going to be significant for markets this week, as we are awaiting some of the earnings results from some of these massive AI companies. Because if we recall, before this conflict started, everyone was kind of worried about what's happening in equity markets because it seemed overpriced. It felt overpriced, yet it kind of stayed on that cliff, and then the Iran conflict happened. So that we kind of took our eye a little bit off it. But it is still performing pretty strong. My guess is, if there is a speed wobble that's going to happen in the equity markets, if valuations do disappoint, we could very well see a strong tumble in markets. But there are questions about how far the US government will allow a correction to happen, seeing that AI is so intrinsically linked into defense system and security matters in the US. I mean, the NVIDIA CEO went with Trump to Beijing now on that summit. So, that's also something that markets are looking out for this week, the earnings and whether or not it's going to live up to expectations.
That's one of the problems with wars, and we've seen it with the Russian-Ukraine war. The longer it takes to sort things out and the longer it lasts, the more people find ways of working around it. So when the Middle East war started now, everybody was concerned, and they looked at all sorts of things to blame and, risk on and risk off and so forth. And then the longer it takes, the more we work with it and find ways of working around it, and then going back to where we were before, an AI boom, markets going up, etc. And I think we're right there. People are finding ways of working around it. And at this point in time, the longer nothing happens, the more they will find ways of working around it, and it will just become a new norm.
Makes sense. And for the Rand, I know we don't have a chart today on it, but any serious catalyst for it, or are we just expecting it to trade within range?
Well, I said it last week, I said it the week before. As long as we're hostages, we're in 1625, 1675 ranges. If things go better in the Middle East, we look towards the 25 and breaking that. And if we look at going worse, then we look at the 75 and ways of breaking that. I'm still there. I'm not changing. I'm still sticking to my guns. 1625, 1675, lovely being a hostage.
André, thank you very much. We will catch up again Monday on whether there's been new developments in our hostage situation. But thank you very much. And then we will chat again soon.
Thank you very much.